Hi folks, how are you? Hope you're enjoying your day today. It's May the 20th, 2020, and I'm going to do my trade review. I had a few trades this morning, and I'm calling it a morning early because the market's kind of sleepy, and there's the Fed at 2 p.m., so I'm not going to be sticking around for that. Maybe I'll come take a look later in the afternoon, but generally. So I had a couple of scalps on the spider options, the calls, and that's it. Very, very quick scalps, and I got out of the remainder of my short call spread as well. And, this is really interesting. I'm just going to talk briefly about the psychology of the whole matter here. And, after this type of dump, it makes sense that a lot of bears are going to be, holding overnight, expecting us to, pull back for a daily higher low and all that stuff. And like with a weak close like that, and then I said, based on what's been happening the last 2 weeks, I said it's absolutely possible that SPY can open up here tomorrow. And well, look what happened. We opened up here. So at least I was short 297 calls at a pretty good premium. So I managed to get out of those. My average price was above 50 and I managed to close it for 41. I took some small profit on that before we rallied this morning because as soon as the market opened, the Qs shot straight up and broke the highs. And then we were in this sort of formation where just kind of straight bull the whole way. And it makes absolute sense from a psychological standpoint because, after a huge dump like that, that'll easily get everybody bearish. And then we open up overnight up here. And then all those bearish people who didn't learn the last couple of weeks, well, rest in peace. So that's kind of the thing we got. We got this grind up and I was watching how I was respecting the 12 exponential on the 1 minute chart so aggressively until we finally started going into this choppy range and then we consolidated for like a two-legged pullback, continuing in this 5 minute uptrend. So I had a couple of the scalps on the SPY real quick and we'll go over that. So first thing was I covered the short call spread on the bid. So I was expecting a less commission, but I still paid $3. I paid $1.50 per contract to close that position, which I don't know why. So then I proceeded to buy the same calls that I was short, essentially, and I only bought a contract here. Picked it up at $70 on a pop, sold it at $78 for the pop. Low commissions, nice profits. Did the same thing again at $9.58. Got in at the 298 calls this time because they were slightly cheaper. I didn't feel like paying up 297s, and I immediately got out for a small profit and then another one, and then sold the other one soon after. Okay, always selling on the offer into these pops. So we'll go over those real quick. SPY 1 minute chart. You can see this was the open. And we'll even use the replay function. SPY 1 minute chart. The high of 2 days ago was an important level for me, 296.75. And the high of yesterday, right around 296. We opened up and we were chopping immediately. Financial sector and healthcare sector were a little bit weaker. So that's what was keeping SPY sort of contained for the first opening bit. But the Qs seeing that continued buying was a signal. It was more likely that we could see more upside in this market. So that's generally what I was keeping an eye on. So I covered the short calls here. Good for me because after that, we rallied. I picked up a long call here. I bought back and I'm not sure where exactly I got filled, but I got filled around $70 and then I was easily able to sell it on this pop right here. Ideally, it would have been better to get long before the pop happened or put it in some kind of conditional order. But, I was ready, finger on the trigger, and I got in and then I got out. And then after we had a same sort of deal. Now see how we tested the high of 2 days ago, 296.75, pulled back again to the moving average, sold off, tested 296, and then we're catching a bull and I got long again there. Ideally, I would have wanted to get long near the moving average, but it's always tough to get long near the moving average because the buyers kind of come in at the last second and they always push it at the last second. So when you're buying the moving average, you have to anticipate that the buyers are going to come in there. But that's why it's tough because when you're trading, you want to step in front of the order flow that's giving you the confirmation. You don't want to wait for the order flow to give you confirmation and anticipate that it's going to come. So that's why there's two different ways of looking at that. You can either anticipate that there's going to be buying around this area, or you can wait for the buying to actually come in and then chase that order flow, I guess. But yeah, so I got in, scalped it, and that was pretty much it. Closed it, and then we continued higher for a little bit of a wedge formation, two-legged pullback, no follow through. Again, a lot of opportunities to kind of trick out shorts. You can see this type of thing where we look like we're going to pull back. Nope, nope, nope. And then we come down here again. Nope. And then look at this inside bars pop up here, make it look weak for a lower high, get a little bit of a bear break, trap some shorts down there, and then boom, straight up we go. And that's the kind of stuff that drives these markets, guys. It's basically who gets screwed over. I'm going to leave it there for today and expect some volatility around 2 p.m., 2:30 p.m. if you're trading until then. I'm out for today, guys. I wish you a great day and all the best. Keep your risk managed. Take care. Bye.